The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach do we go, dear friends. We've got a market that, just took a little bit of a hit here, a little bit of a hiccup. We finally blew through the lows on the S&P cash. 2045.60 is the last tick I see, off about 18 points. Volume has been interesting, but we're starting to see some news, and we'll talk about that through the first half of the show. But none of it from the mavens of Wall Street, at least the people that I follow, are pretty good. And this is actually one of the few days where I can recommend going to the replay on CNBC and getting some at least good information. We'll talk about that today. Normally it's, I'd say, 98% noise, 2% content. And I sift through that for your benefit. I probably wouldn't spend a lot of time looking at it. If not, I just put it on the DVR and fast forward through it for the most part. And if I find something worth something, I will dig it out and put it on the show. So my pain is your gain. Anyway, we meet here pretty much every day between...
The following takes place between 2 p.m. and 3 p.m.
And, that's what we do. But it's interesting. We got a lot of news to talk about. Markets was pretty much, in fact, I was getting ready to say when the show opened up, we've been stuck at 2050 for the last couple hours, and really no juice up, no juice down. But kind of taking a look at it. I kind of want to think about what's happening. But there are so many moving pieces going on right now. We're just going to have to go through them one at a time. But you know what we need to do first of all? We need to get this party started. And, of course, absolutely nothing. There it is.
Just a little bit of history repeating.
It is history repeating all over again. And I think we can learn some lessons from what's going on a macro scale in not only the United States but the world by something that happened today in 1979. The first modern leveraged buyout using high-yield junk bonds, a $381 million deal to take out a company called I've got the pronunciation written down. Howdai. I didn't know how to pronounce that. I didn't remember. It was mostly before my time, at least in trading. Howdai Industries is private. It's completed by Kohlberg, Kravitz, and Roberts. Over the next 6 years, Howdai produces almost a 34% average annual return for its KKR institutional investors. And the modern era, some people say that they actually invented the leverage buyout, but there were some of a much more minor scale before this. But what they did introduce in the stock market is financial engineering. And a lot of people, especially new to the party investors, are very, they don't spend a lot of time in the books. In fact, we're going to be talking a great deal about books today. But they don't spend a lot of time in it. Basically, what they did was take this company that had 7,700 employees and annual sales of about $400 million. It was privately managed and very conservatively by a gentleman. And, he, especially 1980, you still had a lot of people that had grown up in the Depression. They were going to be extra careful with their cash. There was no way that they were getting into the troubles that they got into in the 30s all over again. But guess what? If you see a company like that, you can squeeze a lot of the cash out of it fairly quickly with some financial engineering. But basically, there were a couple of people at KKR that really were responsible for this modern era. But Henry Kravitz was one. He was at a street name before they really kind of got off and started doing all the KKR stuff. But this guy would spend half of his time with creation of shell companies, having meetings for companies that literally did nothing. And what quote quote legal phantoms would do, he had to send himself emails and had to send himself letters because guess what? He was the king of all of them. They were all ways to move things around. It was a big checkers game of moving things here and there with no real benefit, but it has continued these days. Probably one of the most interesting articles I saw this morning was a thing from Bloomberg. And there's a podcast from Bloomberg where they talk about each deal going on. This one is, I don't really spend a lot of time. I kind of read the first bits of it. If there's something really interesting about the way deals go down, maybe I'll listen to the podcast from them. But it's just about how these big deals are put together. Of course, the ones with Baker Hughes blew up earlier this week. But they got some guests and everything else. And very interesting to see that for probably about the last year and a half, any deal that was slightly questionable has blown up from any of the internet people that wanted to get together from and into this Baker Hughes fiasco from Monday. And the kind of the idea is that with the current administration, do not look for any M&R and mergers and acquisitions, M&A, before the end of the session of the current president. They basically have all gotten together and just said, we don't like any of these deals. We think that they'll all be anti-competitive. Very hard to tell whether they would be or wouldn't. But of course, on the deal on Monday, they gave him a laundry list of things that they would never, ever be able to do. And therefore, that's why it was called off. Of course, probably the biggest news today is what I wait for, and that is Jim Chanos and a handful of other folks, but mostly Jim Chanos, because he's one of the guys that, almost everybody talks their book at one time or another. Chanos does, but he does it in a way where he knows that he's not looking for the next 5 or 10 trading days. He's looking for the next 90, 180, or a year. He spends an average waiting time on his short positions of somewhere between a year and a half to 2 years on average over the last 20 years of the data that he gave. So he's not a guy to be trifled with, but more than anything else, he makes money the old-fashioned way. He does his homework. We'll talk about that when we come back. And we got a little quote from him that's probably not making the headlines, but I think it's the most important thing he had to say today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
2047 on the S&P. Cash volume is just a tad lighter than yesterday at 2.6 billion shares. Of course, this hour tends to have kind of a lighter volume as we set up for the close, but it does not look good. It's not overwhelming volume already, but we are looking at probably at least the same volume we had down on Friday, I suspect. So we'll see that, but probably it's going to be a close call. It's not going to be as a slam dunk of having more volume, but I think at least the same, and normally tie goes to the runner. So if we were headed down and volume's the same as Friday, I'm assuming that we are going to continue down. Anyway, back to Mr. Chanos. He ripped individual stocks, but when he rips them, he doesn't just say that their mothers are ugly and, you know, that it's a horrible company, they're going broke. He is very measured, and as I said, probably one of the, even if you're a short-term trader, you should probably understand the long term and the medium term of a stock that you're trading. And he's very good at figuring out the financials of a company. We've talked about most of the stocks that I end up talking about, he ends up shorting. He, of course, doesn't have to worry about people stopping out with a 10% loss. He can wait for 50% up and down moves in a company before he has to get out. Of course, most people would scream if you did that in a personal trading account. So I don't have quite the leverage or the leeway that he has. But normally the things I talk about, I hear him pretty much echoing. And I think that kind of confirms a lot of my thought process. He does it at a level that I cannot do. I cannot hire 10 people to go dig through the books of a company. But most of these companies already have a kind of a smell already. There's nothing new to them. I can kind of look at them now after a number of years and go, you know what? My bovine detector is kind of going off on this. And whether it's Solar City or some of the other companies that everybody wants to love, the cult stocks, you can see the price that they're at, is not going to be able to last. I started that talking about it about 6 months before he did on Tesla. We all have the same thing. He ripped it apart today, basically said almost all the same things I have said about it. So there's nothing new there. Solar City, much more a issue of books and digging into them. I'm not an accountant. I think he would be a great accountant for any company. He would know what people are doing and how they are doing it wrong. Mostly, if you listen to his discussion today that happened between noon and 1, it's about how accounting is done and whether or not people are actually doing anything. Probably the best example was that he gave was, Tesla telling people what they're going to sell in 2020 and 2025, yet they cannot predict what and how many cars they're going to sell next month. He goes on to saying that this giant gigafactory that cost them $5 billion isn't done yet. It's 6 months behind. And of course, the battery technology has already moved past what these guys have already designed the factory for. Unclear whether this factory will ever be able to make the batteries that it was slated to make. And of course, his discussion, which I haven't brought up on the show that's new, there's always a few new things, is the amount of people leaving Tesla in its greater ranks. A lot of the shares of the stock have vested. A lot of the insider guys are leaving. Some of them that didn't have great results, like a lot of the problems with the latest car that came out, have been fired or canned today. It happened almost exactly while he was on the air, and it was kind of hard to tell what happened or where. Now, what I thought was most interesting is not what is getting the press from Chanos today, but what I've been kind of talking about for the last couple of weeks again, and that is the gift that keeps on giving. Here is Jim Chanos in his own words.
The China story is the gift that keeps on giving on the short side, in that it keeps morphing as the credit bubble gets bigger and bigger and bigger and finds different outlets. They're reinflating the real estate market again, which is sort of amazing to me, but they're doing it. They've opened the credit spigots up again. So I suspect that going forward, some of the things that worked back in 2010, 11, and 12 are going to work again.
And he's, of course, talking about China, basically going back to the hair of the dog, a reference for those people that have ever woken up hungover. But pretty interesting. Anyway, as I said, if you need any of those links, you can email me at path@tfnn.com, and I'll be glad to send them to you. You can also always call me at 877-927-6648 or post a message in the den if you would like. Other things going on, of course, what's going on is the SOAN conference. This has been around for about 17 or 18 years. It is a fundraiser, and what happens is a lot of these guys that are big mavens of the street get together. Normally, there's a lot of talking up your book, stuff you already own already, but normally what a lot of these guys will do is wait and tell people their short things at this conference. One of those was from a company called Muddy Waters, which I always wondered about the name. I've got to dig that up one way. Anyway, one of the gentlemen that has been fairly right as of late, and actually over time, is Carson of Muddy Waters, Carson Block. He says that he's short Bank of the Ozarks, and for a cause, he went through them. Another gentleman that is pretty good about ferreting out financials. These guys can smell the dead wood, the rotting fish, and of course, companies that are far too leveraged. That is his comment on the Bank of the Ozarks, that they are kind of like a one of the pharmaceutical companies of late. And that is that they think that they can just go buy other banks, use those deposits, add more loans to the company, and roll everything up. Just keep rolling everything up. And of course, this will kind of work as long as there's no pullback in the economy. If there's any kind of pullback in the economy, these companies blow up, and kind of saying that he's expecting the economy to pull back a little bit and expecting the Bank of Ozarks to blow up at the same time, because they can't handle it if the market pulls back. They are far too leveraged. Who knew? Well, Hulu knew. This morning at Hulu Upfront in New York, the Hulu CEO, Mike Hopkins, confirmed a recent report from the Wall Street Journal indicating his company was developing a live streaming service to complement its current on-demand offering. All I can say is one of the things I've always disliked about Netflix was not their service. It's like Amazon, great service. The question is the business model. And if anybody can go rent a bunch of servers from Google or Microsoft, they basically can set up a television streaming service live or on demand. Let's begin.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we had kind of a little test at the bottom, but no juice on the pop just yet. 2.7 billion shares at 2051 on the S&P cash. As I was saying before we left, one of the things I really dislike about a business is, of course, if anybody else can do it, then there are no barriers to entry, and then everybody's doing it, and then nobody makes any money. You've got to be able to get in front of it. Now, Netflix started by just course, renting DVDs, then, of course, streaming. Now their next issue is, of course, trying to, do their own content. They've been successful so far, but if anything we've learned about content companies is that they have the ability to do some really horrible things. Netflix is not alone. Of course, its Marco Polo series, pretty extremely expensive, let me put it that way, and nobody watched it, so they didn't get any real results out of it. And that is the problem. They've been doing very well, but like Orson Welles and Citizen Kane, at some point, you do so well, the only way to go is down from here. And I think they're doing okay, but just you got to roll some dice in creating stuff, and eventually they're going to get a few stinkers in a row. And I think we're going to start seeing Netflix kind of catch up with the idea that literally any other company can do what they do, including create their own content. In fact, Netflix has actually gone from DVDs to streaming to content, and if they have their ways, maybe trying to bootstrap themselves into an HBO. But maybe that is where they'll find a niche that is defendable over time. But who knew? Hulu knew. After the bell tonight, Amdocs, Annaly Capital, Atmel Corporation, Bluebird Bio, GoDaddy, Great Plains All-American Pipeline, Corvo, Sunoco, of course, Tesla. That's probably going to be the good one from tonight. Tesla, Transact Technologies, Whole Foods Markets. Apparently, you don't know farm to table. Oh, I love that episode of South Park. And the Williams Company. And that kind of wraps up the snooze for today. As always, when news breaks, we'll be there to fix it. In the meantime, we're going to look at some stocks that are moving. ICE is up on fairly significant volume and energy. But, I don't know what else you can say about it other than that. We'll go back here maybe a little longer time frame for this. Still not back up to the previous highs. Earnings were pretty good. I guess surprised a lot of folks. Got to 262. Unfortunately, a great deal of these companies, as soon as they hit any previous high, start seeing the real resistance. In this case, it is the resistance of the heavy down day of the 4th of February when this thing pretty much cratered with about 3 million shares. You got about 2.1 million so far today. Other earnings companies out here, EC, it's up about 4%. Earlier, let's take a quick look at this. Come on, Mr. EC. Expetriol continued to head higher. Tried to go higher, couldn't really out here. And again, a great deal of these stocks, probably shorting on the 9-day right now is probably not a bad idea. Of course, when we talk about the loser horn for today, that is got to be a price line, PCLN. Oh, let's go ahead and fill the chart here. I gave it the losing horn. Down 130 or 140 bucks at one point when I looked earlier today. This has come back into the gap up. That gap happened on the 17th of February with, let's call it 2.4 million shares. You already have that kind of volume already. You already pierced a great deal of that. Of course, they've already had a CEO that left. In fact, we talked last week that if you were going to do anything, I didn't get a real good signal on Priceline, but if you were going to do anything into earnings, you'd probably want to have been short. But 10%, not enough for me. I need a little bigger out here. And maybe we do an ABC up in this thing, and that sets up the longer downtrend. But I have a feeling this is headed back to the 954 low when we get back to the February 9th low, and that gets tested. Vail off significantly. BHP and Vail all getting sued. And let's see if there's anything else out here. Let's take a quick look at UAL. And again, you can give me a call at 877-927-6648 or email me at path@tfnn.com. Yeah, this is still trying to get into United Continental Holdings into this low. It's a February 9th low that had 9.3 million shares. We're still $1.15 above that, but already have 10 million shares. So into that candle, volume, of course, by the end of the day will be more than that one. You have yet another low at 42.17. That's a little higher volume. That is at 11 million shares. Certainly looks like the energy is already there to the downside to at least get back probably into all the candles of those previous lows on United Continental Holdings. Actually up today and getting the winning horn as soon as I find a applicable winning horn sign is the Zillow Group. This had a nice pop out here. You just got to think that, Tom talks about this a great deal and works with these companies and seems to have a great deal of praise. Maybe he'll talk a little bit more about it today, or maybe he did it last night and I forgot about it. But a nice little pop in this stock. You have volume. You're back out of this trading range. If you could get this thing back to about $26 on light volume and the market was turning higher, this may be a very interesting play out here, but you need for this thing probably to come out and fill the gap. There's no guarantee that you will do that. What else do we have out here? MTCH. Up about 15% earlier in the day. Match.com. I've always worried about the company because of what they do. This is, of course, Match.com. And, of course, Tinder. Some of the other ones that are, let's say, sketchy at best in what they do for their customers. We'll call it legal, but seedy. Maybe that's the best way to do it. Of course, almost all these companies, including Yahoo, that have been in this dating kind of idea forever, have always committed some level of subterfuge. Yes, even Yahoo did it. Phony ads, bots telling people what they want to hear, but not real humans on the opposite side of it to keep things moving. Don't know about this company, but man, it did not like getting through its previous high. We'll talk about this when we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, don't miss out on the Market Safe Commodity Solution CD from Everbank. This is the second running of their popular 5-year U.S. dollar-denominated CD, which gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar. With annual pricing caps of 70% per component, you can earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The May 19th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member, FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, we have a little bit of a strike here. We got a seller's strike. They don't want to sell. But we also have a buyer's strike. They don't want to buy. And we're stuck right around this 2050 level. I do not see a lot of juice at the moment. Of course, most likely those orders will show up for market on close around 3:30. And we'll get the decision at the end of the day. Of course, that will be in the next hour with Tom O'Brien. Of course, tonight we have the one and only Andy Heck, the Emperor of Energy, the Monarch of Metals, the Ayatollah of Agriculture, the Lord of Livestock. And if you're interested in commodities, check out his webinar tonight. It runs, the next 4 weeks? 12 cardinal rules for trading commodities and the things that you need to know. And, of course, you're going to get a PhD from a guy that has been and spent his life in the street, or on the street, and in the foxholes of trading commodities. And I don't think you could probably get a better education at a price that is ridiculously cheap. So check out Andy Heck's wonderful webinar series starting tonight. I will be watching. Other things of interest as we get back to waiting for earnings tonight. Let's see what else we have out here. Got a couple of questions on Tesla. You know, the problem with Tesla, it is a cult stock. And reality eventually catches up with them. The problem is, how many times can you be wrong? The downside to Tesla right now is just how short it is, how many other shorts are out there. So they can probably, say some good words, put some happy thoughts, tell everybody, they got some other stuff going. Most people on Wall Street, though, think that they will have to raise more cash. That means dilute shareholders. In the meantime, they've, of course, gotten a lot of people with $1,000 deposits on a car that are fully refundable. So a lot of people have lent Tesla money for no cash at all. If they truly got a number of cars in this new car that they're talking about, that's interesting. But as Jim Chanos said today, if they can't make money on a $120,000 or a $100,000 car, how are they going to make money on a $35,000 car? I follow the logic. This thing has given a double repo signal and is done everything but throw up the flag. Let's get the numbers, though, since I do have them on exactly how short Tesla is going in to earnings tonight. And I will pop them up. TSLA. So yesterday, 24% of all the shares were short orders. Doesn't mean they went home that way, but 1 out of every 4 transactions started with a short. Gives you kind of an idea about how things are going on. If we look at the bi-monthly data for that, days to cover went from about 6.9 on the 1st of March to about 3.4 days to cover mid-month. But we've had a lot of people going back and shorting the dickens out of the stock for the last week or so since it got above that 250 level and stayed there for a while. But, we've had days where, in fact, I can do the highest. We've had a lot of days, and most of these are in the, not too distant past, where these things were almost a third of every share was issued as a short in the stock. And that is really where you have to watch out. Limited float, a lot of true believers that don't care where and what the real earnings are on this. Eventually, one day, they will come out. I've tried to take some shots on this. We made money, I think, 2 or 3 times. We stopped out once on this, or maybe twice. Made some really good money on it. It's just you got to catch it right. And as I've always said, this is a stock that is a $40 stock. And if you want to pay for earnings that will take 10 years to develop to equal their current price, Tesla is the stock for you. Not a bad company, not a bad car, just an extremely expensive stock. And the question is whether or not they can make money or get enough cash to fend off many competitors. I am in the technology part of it. They made a very good car. The question is, what technology do they have that will, as we talked before with Netflix, what is the barrier to entry to everybody else doing the exact same thing? And what is the barrier to all these other car companies that by mandate now have to have electric cars, and they're going to have to sell 10, 12, 15,000 electric cars next year against Tesla's car when it comes out. But guess what? No one's going to want their cars. They're just going to have to push them out. That means that there's going to be a glut of electric cars. What if you could buy a Chevy Volt for 20 grand instead of about 40 grand for the model that's coming out from Tesla? 20 grand, even if you have to replace the batteries, maybe they're starting to look a little attractive down here. Maybe it's not the car you want. But Tesla, fine car, fine manufacturer, fine CEO, but one big problem, and that is the stock is priced like they turn lead into gold, and we all know from those days that no one's ever been able to do that. It's only able to be done in the heart of a supernova and in the last 2 minutes of the life of a star. It is very brief. And 2, this is not a iPhone where you can crank out 100 million iPhones in 90 days or 60 days and ship them all in 15 days after they come out. There are a lot of component parts. You have to deal with other companies making your stuff. It doesn't work like that. Financial innovation in probably the car company is probably something that seems just a bridge too far for me. And we got about a minute and a half left. Let's see what else we have going on out here. SERV. SERV. Down. ServiceMaster Global Holdings. Down on huge volume. It's blown out its previous low. Did not hold the low, but certainly it did go through the February 9th low, $34.36. That had 2.3 million shares. We kind of went over it today, 8.6 billion shares. So kind of a tough row to hoe out here if you are thinking about doing this. But, where do we have? What's the next lower road out here? 3210 takes you back to September 29th of last year. My guess is it's $2 lower. Probably not a big stretch to think it goes down there. and says hello to my little friends down here, September 29th, $32.10. Not a lot of volume there, but still a low. We'll be back after this brief commercial time.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we'll look at a few others out here. Of course, we've got Cray Computers. One that's always near and dear to my heart. I remember the day that I went to the IRS. This had to be mid-'80s. I was a computer nut, of course, and wanted to go look at, they were bringing in these 2 new supercomputers. If you've never seen a Cray computer, it looks kind of like a tower with a bunch of seats where you can sit around it. But of course, back then they were all hooked up to liquid nitrogen to cool them. Anyway, the IRS had bought 2 of these, each one about $500,000 a piece at the time to start working on something. So we went down there and looked at them and got the tour from the Cray folks and everything else. And of course, we were a bunch of guys with PCs. Never would have a supercomputer, but we wanted to go down there and stick our nose in it anyway. So anyway, the grand comes out, and of course they flipped a switch to turn both of them on. Unfortunately, they only hooked one of them, the liquid nitrogen, and the other one melted down in about 10 seconds, destroying a $500,000 computer for the IRS that day. Maybe it was $5 million. I can't remember. It was 5 something. And I'll always remember that day. Anyway, Old Man Cray, one of the geniuses of the original computer. And of course, all they do now is really build scientific computers for academia and the government. Came in and dropped the chalupa today and headed it back to this big gap up that is on October 30th of 2015 with more volume. Certainly already into this candle and kind of headed back to probably this 25, 24 level, I suspect, before it finds a great deal of support. Already blew through all the previous levels out here. When you actually look at the reasons for it, you have to wonder. This is one of the big problems with one of these companies already, is that they tend to do a lot of government work, and their earnings can be lumpy, and you get a nice run out of there, and these stocks can go up well, but then you get maybe a quarter or two where they don't get any orders at all, and that's kind of what's happened here. It's unclear whether or not they really have lost that much business, or whether it's just lumpy, because, of course, they sell a handful of computers. Depending on when they go in and out during the month, it can be problematic. But I have a feeling that they had a bunch of orders, were a little backed up. All the quarters look good into this one, and maybe they either satiated demand or had other issues. But another one that looks rather bleak out here today. Had a lot of other stocks. Mygen was off about 7% today at the open. Illuminous off yet another 5%. Western Digital off yet another 5% today. Technology on the non-FANG stocks really starting to see some weakness. But for the most part, that's about it. And, of course, we're looking at a big pullback in gold, something that people haven't really thought about for a while, but we'll let Tom wrap that all up in the next couple of hours. In the meantime, watch out. Like I said, I have shared my view about China coming back to bite us from last summer. Remember that we're getting within about a month or two of when those shares that were not sellable are sellable yet again. You think if you were stuck in a stock for the last year, would you sell it at the first opportunity? I think I would. Anyway, are they going to give them yet another year? Stuck in these stocks forever? I don't know. We'll see you tomorrow. Same bat channel, same bat time. So when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.